Hello and welcome to CMC Markets Trading Outlook for the week of January the 19th, 2015. We're coming off a week where that ended up being dominated by a huge surprise event of the Swiss National Bank removing its peg against the euro. This week we're moving into a week that looks likely to be dominated by a huge scheduled event, and that is the ECB meeting, where it's widely expected to start to bring in a new quantitative easing or other forms of major monetary stimulus to get the eurozone economy moving once again. It could be said that perhaps the part of the reason why the Swiss National Bank decided to take the action that it did was on anticipation that if the ECB came in with a big new stimulus program, that could take the euro down and basically break the peg that was already there, or become too expensive for them to be able to hold it. So based on that, expectations are running pretty high that the ECB is going to do something pretty big. They've sent up a number of trial balloons. About a week ago, there was reports of a 500 billion euro quantitative easing program, other talks of other means for asset purchases in the bid to really boost their balance sheet. And another place we've seen that is a rally in gold. Gold has been tracking the ECB balance sheet for some time, for several years now, both upward and downward, and gold, of course, has also been taking off over the last few days. So we're looking at a real focus particularly on the ECB meeting this week that's likely to dominate trading. There are a couple of other events that are significant, though. There's a Bank of Canada meeting that could impact trading in the Canadian dollar and other oil currencies, and also there's China data, including China's Q4 GDP, retail sales, and industrial production. So, and that comes out Monday night. So there's a lot to focus on, but it's really three big events that people may be likely to key in on this week. In terms of U.S. markets, we kick off the week with a holiday. It's Martin Luther King Day on Monday, and we do get earnings reports through the week, but the economic calendar for the U.S. is actually fairly light. The focus is likely to be elsewhere. So let's start off with Europe, and I wanted to highlight something interesting with the client sentiment we're seeing as we head into the new week. So we have here a number of readings of client sentiment towards Europe, and what we're seeing today here on Friday the 16th is that the DAX is trying to break out to a new high. So again, that's really powered ahead. It's above 10,000. People are expecting that the ECB will come in with big stimulus and help to boost the eurozone economy and corporate earnings. On the other hand, clients don't seem to necessarily believe it, and it's something where we're seeing that so many people have piled in on one side of this expectation, that expectations have become pretty high, and it's actually raising the risk of a disappointment, that even if the ECB does come in with big stimulus, will it be enough to meet what's been already priced in by the streets? And will you see a disappointment? Will you see profit taking against the news, or will it be even bigger and push markets even further in the directions that we're going? So because of that, we could see a lot of trading action in and around this ECB meeting. And in particular, so we'll start with the stocks. Germany 30, the DAX has rallied above 10,000, touching new all-time highs. People are really enthusiastic that the big ECB program could mean great things for corporate earnings. However, what have we got here? Clients are actually net short the DAX here, which is quite interesting. In terms of position value, 91% on the bearish side, and that's actually gone up. So people have been going short into this rally again, and it's not the first time we've seen this happen with the DAX over the last few months either. So something to be aware of. On the other hand, you've got, if you have a big massive stimulus program out of the ECB that's driving stocks higher, you would expect people to be expecting the euro to continue to go lower, and then that's actually the case here, and we're seeing that we've got substantial bearish positions in currency markets against the euro dollar, euro yen, euro Swiss, and other euro pairs. We're seeing where clients are primarily on the bearish side. So on the other hand, you've got clients on the currency side thinking, yes, a big stimulus program out of the ECB, maybe even bigger, that could push the down. And on the other hand, on the stock side, you've got people starting to question it and wonder wondering, will it be enough to match expectations? Because of this, it's Thursday morning. It's 12:45 GMT, 7:45 a.m. Eastern Time is the big showdown with the ECB. And the if we don't get it right away with the actual news and the interest rate decision, the press conference with ECB President Draghi starts at 1:30 p.m. GMT. That's 8:30 in the morning Eastern Time, and somewhere between those two, we'll probably get the big showdown, the big news, and potentially a lot of big action in stock markets as well as in currency markets. Moving forward, I'm going to also mention that, and I'll show a couple of charts here now, actually, in terms of indices and currencies, so we can see what's going on. We'll start here with the euro dollar as an example here of what's going on in currency markets right now. So as we bring it up, we're seeing that we have euro continue to be under pressure. It's been relentlessly driving lower for over a month now, and has broken down to another low today. Now you're getting pretty oversold here on the euro dollar. So if you get any kind of a disappointment, you could get a quick snapback reaction, a bear market rally, or some kind of trading pop in the euro if the ECB doesn't deliver, or if people decide to take profits on their shorts against the news. So ECB now really has to come in with something big and something serious to continue this, or this trend could be at risk of a reversal here. Similarly, we'll bring up the JAX, the German 30 here, and show what's going on with that. We're seeing it explode here. It's gone up to a new all-time high. It's broken through 10,000, 10,100, and carrying right on. So in this case, we've got high expectations from the stock market that the ECB may deliver and continue to go. We've got this head and shoulders formation in the RSI has failed. Upward momentum increasing. So basically, you're looking at both sides right now. Still, people are looking at a very substantial program coming from the ECB. So it's getting to the point where they better deliver, or something could you could see a significant disappointment here. If they do deliver, could maintain the trends unless some of these people decide to take some profits against some of the action. Now in U.S. markets, things are a little bit mixed, and I'm showing here the client sentiment, which shows in terms of number of clients are long the S&P. In terms of position value, clients are short the S&P. What that's suggesting to you is that the bears at this point have more conviction than the bulls. People are moderately bullish, but the people that are bearish are taking bigger positions against the market. And one of the things we're seeing here in the United States is actually head and shoulders tops forming in the Dow and the S&P. If we look here, we've got left shoulder early December, late November, head at the end of December, shoulder in about a week ago, and we've seen it starting to decline since. We've got the S&P back under 2,000. It keeps now has been bumping up against 2,000 as new resistance. We've got a general downtrend in momentum shown by the RSI. First support's around 1990, neckline support in and around 1970. There's a neckline. There's also the 200-day moving average in at around 1970. So that's looking like a pretty key test there for the S&P 500. Keep an eye on that as we move through the week. Something else to remember, when we were looking in the past at vulnerable points after the end of previous QE programs, there was one about week 7 or 6 to 9, and then there was another one around weeks 12 and 13. We're going into weeks 12 and 13 since the end of QE3. That's the second half of this month. So we are still in a vulnerable period for liquidity in terms of U.S. stock markets. So keep an eye on that. We could still see some choppiness in the U.S. this week, even with the holiday on Monday. Moving on now, I'll talk about the other big central bank meeting this week is the Bank of Canada, and it's quite significant. This meeting may turn out to be more than people have been expecting, because it's the first one since we've seen the latest, the real crash in the oil price, and what is the central bank going to do to respond to this? I'm just going to bring up a chart here. I'm going to start here with CAD US dollar. as an example to show where sentiment is mixed. Canadian dollar has come down a lot. The question is it ready to stabilize? Is crude oil ready to stabilize? And how does the Bank of Canada fit within all of this? On Friday here, we are seeing in the last couple of days crude trying to stabilize in the 45 to 50 range. I'm not convinced this is the bottom, but you may get a pause in this range for now just because it's become so oversold. We've had a fairly significant rebound lately in the Norwegian krona, which has had a nice boost, and I'll show a chart on that in a moment as well. Now, the Norwegians have had come out here on Friday and basically said that they've been having discussions on what to do. They think this will impact their economy, but it's not a crisis yet. And the Norges Bank has already cut interest rates once to try and prop up the economy. The question is now: is the pressure now on the Bank of Canada to follow suit and start cutting interest rates as well? They haven't done anything on interest rates in the last several years. Heading into now, the feeling had been that perhaps they could raise interest rates later in the year. So will we see talk of a shift back to neutral, more dovish talk out of the Bank of Canada, or an actual rate cut? I lean towards, at this point, probably an initial phase of jawboning, because the Canadian dollar has come down a lot already, to which over time should help to rebalance the economy. But I wanted to show a chart also, though, on dollar CAD, because the market is actually taking a more bearish stance towards this, which is that we're seeing here. It was interesting. We saw it had been fairly choppy, trading in a 118 to 120 range, and on Thursday, when the Canadian dollar had actually strengthened, but it's reversed and actually has now tried to break out over 120. This 120 breakout has actually failed here on Friday. It's back below that level, and it's gotten pretty overbought. So people are pretty bearish about the Canadian dollar, been bearish about the oil price. If you get stability in the oil price, and the question we ask is the market starting to price in a Bank of Canada rate cut? If they are and you don't get one, then you could get a reversal where you see the loonie rebound, US dollar CAD come back down. It's already back down under 120. Maybe it retests 119 or 118. It's hard to say. And actually, we'll quickly just bring up the CAD US dollar for people that trade it that way. Here, which is sorry, CAD US dollar. So I was showing mixed sentiment on this pair. People not quite sure. It's still in a downtrend. It's trying to stabilize here in this 83 to 84 range. It is getting oversold. You could get a pop if you do first resistance in at around 84.75, more at the 85 round number. A downside first measured support around 82, and if you did start to see it resume, you'd have to think that over the longer term it could retest the 80-cent round number. I do want to bring up briefly the Norwegian krona as well, because it actually has been showing signs of rolling over as well here against and some stability. So it's had a pretty strong, it's been rallying, so the Norwegian krona has been weakening against the US dollar for some time. It's gotten extremely overbought in the RSI, had a double top here. It is starting to roll back under, suggesting upward momentum fading potential. These are pulses, but you've almost got a triple top here of long shadows in the Norwegian krona up to about 790. It's dropped back. It's testing 760 here. This 740 is a possible first level of support, 23% retracement. It does look like it's starting to roll over both on the pair as well as on the RSI. Now that we've been talking a bit about crude, let's actually talk about the crude oil price and sentiment towards commodities, which is quite intriguing here as well. Particularly because one thing we may see some action on early in the week in commodity markets. One of the big drivers could be on Monday night Eastern Time, Tuesday morning in Asia Pacific, is the China data, China Q4 GDP, retail sales, industrial production. You could see a lot of action in that in commodities, also in the resource dollars, particularly the Aussie dollar, the Kiwi dollar. What have we got here? We've had oil's been slammed pretty hard. It's starting to stabilize. So we've got clients pretty much net long now, have been turning net long on the crude oil, in this case Brent crude. Clients have also turned net oil long on gold, with gold rebounding. However, we are seeing here that clients are still net short on copper. Copper really tumbled and fell out of bed over the last week or so, and so people are still short on that. But on the other hand, now the question is, so if China misses, then perhaps you see some more weakness. If China does a little bit better, you could get a turnaround in the copper market. So keep an eye on that one. That one could be particularly active around the China data. I'll just highlight here a few charts to show highlight some of this action. We'll start with crude oil Brent. Here is, and we're seeing a support come in about 45 and resistance about 50. Both Brent and WTI had tried to peak back above 50 and got knocked back down. So it looks like they're not ready for prime time yet. Even though they're oversold, we could see them kind of stabilize in this 45 to 50 range for a little while. Long term, we're seeing this as a significant bear trend. You've had a staircase down, a sell off, consolidated lower level, sell off, pause at lower level, sell off, pause at lower level, and so on. And this is another one probably of a sell-off and a pause at lower level. You take out 45, you could see the 40, and eventually at some point this year we may yet see 35, which was the 2008 low. But for now it looks like oil at least is trying to stabilize. You could see some range-bound swing trading in here. Gold has the potential to be quite active, particularly around the ECB meeting. As I noted earlier, gold has over the last 4 years or so has been following the size of the ECB balance sheet upward and downward. ECB grows money supply, gold had gone up. When the ECB ran their stealth taper and ran down their balance sheet, gold came down. What's happening now? Gold is taking off again on anticipation of some serious new money stimulus coming in from the ECB. Now, because of that, we're actually seeing upward momentum's accelerated. It's had a good run up here to 1275. Next resistance in this 1288 to 1300 range. But gold may be starting to get tired here. If we get a disappointment out of the ECB, you could see a reversal. You could see gold come back to 1250 or even to 1235 here where it broke out of an ascending triangle. Gold could be vulnerable and it could be active in and around the ECB meeting depending on what comes out of it. The final commodity market I just wanted to highlight briefly is copper, which could be quite active around the China news. As we can see, copper in the last week or so has really plunged. It was almost gone parabolic to the downside. Steady decline, and kaboom, after it took out 80 cents. It's gotten pretty oversold too. Seems to be trying to stabilize. That's 255. Up here is about 265. 255 to 265 channel may be emerging for copper. This shadow low here is 245. So we could start to see it stabilize here. And if China data is not that bad, then we could see this start to hold. If China data is really bad, then we could see it take another run to the downside. So another one that looks like it could potentially be very active around the China news. And I'll just wrap up here with a couple of comments on the Australian and New Zealand dollars, which look like they could be quite active as well around the China news to kick off the week here. Kiwi dollar has had a big sell-off back July through October. It's been basically stabilizing here. Double bottom at 76. Supports moved up to 77. First resistance at 79. And 80 is a big one. It had one day it peaked up above 80. You'll recall I showed this with crude oil peaking above 50 briefly and getting pounded back down. Well, here's what happened with the Kiwi dollar. One day peak above 80 cents. Knocked right back down. Nobody was ready to see it move up yet. You could still, perhaps, people are worried that the RBNZ will step in above 80, but you are seeing it basically trying to bottom out here. RSI showing sideways momentum. And finally, I just wanted to show the Aussie dollar, which is this one. Aussie dollar also starting to show signs of stabilizing. The central bank threats against the currency and in terms of intervention haven't been quite as strong as New Zealand, where they actually did it. But we did see it peaked up to 83 cents, knocked it back a bit towards 82. Overall, RSI showing downward pressure easing. Higher loads in the pair is suggesting renewed accumulation. You've busted a downtrend. It's trying to work higher here. Getting above 82 breaks out of a little rounded base here, and that measures you up towards the high 83s, maybe this 83.75 here, which is also a a 23% retracement level, so a Fibonacci test there, or 84 slightly above that. So overall, we've got still looks like another active week for markets. Swiss franc could also be very active as it tries to find levels, new levels of equilibrium against other currencies having been pegged for so long. We could still see some volatility in that and in and around global markets. So even though the U.S. is closed on Monday, from Monday night right through to the end of the week, particularly through Thursday, looks like another very active week for trading.